For a very long time, I always wondered why prices of shares and exchange rates change all the time. This was even when there was no news to impact the change in price. This is when I then discovered what we call technical analysis, specifically the tools which technical analysts use to predict price movements. My name is Dr. John Yamunda, and today we are going to talk about the tools used by technical analysts to predict price movements. But before that, let's talk about fundamental analysis. Fundamental analysis argues that the value of an investment is driven by macro factors, which are significant economic factors or significant nationwide factors or industry factors, which is to say the value of an investment is driven by what is happening in an industry in which an investment operates or in which a company operates. And then, of course, the value of an investment is driven by the specific factors which affect that investment. Technical analysis is a completely different viewpoint which says that the price already tells us everything we need to know. We do not need to go and dig fundamental factors because everything is already discounted in the price of the share. To learn the future direction of the price, we need to study the market price. The question is, what specifically should we check in the price in order to know the future price? It turned out that there are three main things which technical analysts look at, which is the line charts, the bar charts, and the volume charts. So line charts make it easier to understand what is happening with price. Then when we look at bar charts, this specifically when we look at what we call the candlestick diagrams, the candlestick tells us much more than the line diagram. The line diagram only tells us what was the closing price, but the candlestick tells us much more. Like, for instance, if you look at the first candlestick, you can see that it is red, which is an information component, but also to say what was the opening price, what was the closing price, what was the highest price on that particular day, and what was the lowest price on that particular day. Even the color of the candlestick tells us, if it's red, it tells us that the rand closed lower than it opened. And if it's green, it's telling us that the rand closed higher than it opened. But when you look at bar charts, there are different types of bar charts. The most popular being the candlestick chart. And then the other one, which is very similar, is also a bar chart. But we are not going to delve into the major differences between these two. Suffice it to say, they contain much more information than the line. Then we go to volume bar charts. Volume bar charts are simply trying to express how many units were traded on a particular day. For instance, if we look here and you look, let's say, in day number 4, we can see that it was 19,600 units which were traded. Then this is expressed or represented by this bar, this fourth bar. In fact, the bar charts stand really out. If we were to superimpose the candlesticks on top of the bar charts, now we have a much wider information about the investment. Now we know that when the volume was going up, you can see that when the volume was going up, the price was also going up. Then it reached the maximum. Then when the volume started to taper off or to reduce, we can see that the price is also closing lower and lower and lower. So in conclusion, we say, though we looked at three different types of charts, technical analysts use many more charts which we didn't cover, but fundamentally they use those three charts, which is the line chart, the bar charts, and the volume bar charts. And they also look at other factors other than those three charts which we covered today. Thank you and goodbye.